today's show, once again, is action packed. How's everybody doing out there? Everybody good? All right, let's do a quick little house cleaning, and then we'll get off into this thing. All right, let's hear from our person.
Welcome to the Mortgage Mayhem podcast, where the mortgage game meets real life, real talk, and a whole lot of chaos. We break down the deals, the drama, and the data behind the scenes of real estate finance, with a twist of street smarts, savvy, and a touch of madness. Before we dive in, here's the deal: the Mortgage Mayhem podcast is for informational and entertainment purposes only. We are not attorneys, CPAs, or licensed financial advisors, and nothing you hear on this show should be taken as legal, financial, or investment advice. Always consult a licensed professional before making financial decisions. Well,
all right. So hopefully you guys are listening to that. Make sure you reach out and touch whoever you need to reach out and touch in order to make sure you're getting sound advice. Here we're just giving you our perspective on things from experience. That's why I always like to bring up other professionals who can kind of break things down in their world. That way you're not just receiving it directly from me all the time, which is not a bad thing, because I'm only giving you, tons of game, on a regular basis. But, just to make it not just about me, that's why I bring up other folks. That's why I do breakdowns on companies on a regular basis, just to give you a broad stroke of information for you to go out and do your own due diligence and make your own decisions. So anyway, let's get into this thing. It's going to be action packed. We got, some talking to do about, the new federal housing rules, to, Michigan's unemployment chaos, America's sex recession, which is crazy, and the political shakeups, plus a deep dive into one of the biggest title companies in the world, Stewart.com. This is one episode you can't afford to miss, and don't forget, I'll also be giving you 4 new real estate hacks that I guarantee you never heard before. So let's jump right into this thing, okay? Let's get started. What do we want to talk about today, folks? We got, quite a bit. So let's get into this thing. First up, let's talk about what we were just talking about a little bit. A sex recession. Americans are smashing less than ever. According to a new study that says that they are having less sex. So let's talk about that. This new study, led by researchers at the Institute for Family Studies, says Americans are having even less sex than they did during the COVID-19 pandemic. For decades, sociologists and psychologists have been concerned about the downward shift in sexual activity, and the worrying continues. In the report called The Sex Recession, researchers at the IFS reviewed data on sex and intimacy in the latest General Social Survey produced by NORC at the University of Chicago, which was collected in 2024 and released in May. Researchers found that only 37% of people aged 18 through 64 reported having sex at least once a week. This number is down from 55% reported in 1990. When looking at the young adult study, the decline is even more striking. Nearly a quarter of people ages 18 through 29, or 24%, say they had not had sex in the past year. This number is twice as many as reported in 2010. The decline in sex with young people is being attributed to stunted social skills, rise in internet pornography, and more. All right, so let's talk about this for a second. You know, we've been out here in this world for a little piece, and we've been able to kind of see how the decline in that one on more people have more access to you now. But to me, it just seems like when you didn't have as much access, it allowed you to be more creative in going after, females, or females going after males. And I'm thinking that it's starting to spill over into the bedroom as well, right? Because this is crazy. Nearly a quarter of people aged 8 to 29 said they hadn't had sex in a whole year, right? I mean, at 18 through 29, the last thing I was worrying about was having, sex within a year. And that was because, it was more romance. It was more, the ability to, talk to folks, one on one, not hide behind screens and, DMs and all the newer technology. You had to earn, an opportunity to speak to a young lady. You had to earn an opportunity to take a young lady out. And then you definitely had to earn an opportunity to, for whatever reason, have X with, a young lady who may have found you favorable in some kind of capacity, right? So I just think it's more so, people just don't have the same abilities. You got all the technology, but your human ability to attract is what's being lost out here in the world nowadays, right? You want to be able to get women, and women want to be able to get men to see it their way. But nowadays there's so many different avenues to do that, so it just kind of makes it easier, and then in turn it allows you to become lazy. You know we had to mac up on a female back in the day. You had to have game for real, for real. You had to, you know, we didn't have cell phones and things of that nature. You had to mac a chick wherever you was at. Remember that phone number, have pen, paper, pencil, paper, whatever the case may be, in order for you to log them digits. So in hopes that you can later on, get on the phone with that individual person and have some dialogue to the point where you can move things forward. Nowadays, you can slip in somebody's DM. You can, you got FaceTime. You got so many different, ways to have, access to an individual where the human element is just gone for the most part. These guys aren't even, I sit around, I'm around young people, still on a regular basis. And the whole idea of dating and taking folks out, and, they're still doing it to some kind of capacity, but, it's just not the same. There's no romance no more. It's just, it's just different. Back in the day, we had to really show a person through our actions that we was, worthy, so to speak. So I think that's pretty much what that is. These guys got to kind of take a page out of the old school book and, get back to, romancing, get back to communicating face to face and not hiding behind computer screens. That's what I think. I think if we switch that up and you know, get back to some old chivalry and, holding some doors, opening some doors, doing the things that will, have a young lady impressed by your actions and not by what's coming up out of your mouth, right? You want to be able to say what you got to say, but at the same time have the actions to, follow your words. So, yeah, that's a tricky one. I mean, that's that new school. Y'all got to get it together, man. You're going years between 18 and 24, and you're not out here, living your best life, exploring, trying to figure things out, protecting yourself accordingly, and just trying to find your way, trying to discover how to manage a relationship, how to be in a relationship with a young lady. That ain't just something you just roll out of bed and get yourself into. What you end up doing, if that is what you're doing, you're gonna find yourself, you know, not being able to have anyone to see it your way, so you can explore, so you can grow, so you could potentially find that one that you want to spend a considerate amount of time with, and in hopes that you might be able to find that one, that soulmate. So get to work, young men, young ladies, because ain't nothing going. Things aren't going to change all of a sudden. Technology ain't going to change. It's going to be the same old, same old. So get your game together. Get your, not just your game, but just figure out who you are, what you bring to the table, and have the conversations with the young ladies out here. Confidence is key, guys. Don't be out here not being confident, because the worst thing in the world to me is a man trying to approach a young lady without confidence, because eventually what's going to happen without that confidence that you need is just going to, put you in a situation that you don't really like. And then you find yourself continuing the cycle. So, spend some time, understand who you are, understand what you bring to the table, and start having those discussions with young ladies, and get back to some old school chivalry, and I think you'll be just fine. But if you keep playing these internet games and FaceTime games, and not communicating with these young ladies, they're not going to be fooling with you like that. So get it together. Get it together. All right, let's keep it moving. Is this what we want to go? No, that's not it. All right. All right. Why am I not being able to find what I'm looking for here, guys? All right. Sometimes, what happens is, as I kind of break this thing down for you guys, um, let's just talk about this. The new FinCEN rule targets all cash real estate deals. Okay, that's where we at. All cash real estate deals. Right, here we go. So, what's happening out here in the world, folks, is a major shift is coming to the U.S. housing market. Beginning December 1st, 2025, the Financial Crimes Enforcement Network, that's FinCEN, a bureau of the U.S. Treasury, will enforce a sweeping new rule designed to curb money laundering in real estate. The regulation, known as the Residential Real Estate Rule, requires reporting of non-finance property transfers, including all cash purchases when the buyer is a trust, LLC, or corporation. Settlement agents, title companies, attorneys, and other parties involved in closings will be responsible for filing detailed reports on these transactions. For everyday buyers paying cash, as individuals, noting nothing will change. The rule specifically exempts natural persons purchasing in their own name. Instead, it zeroes in on opaque legal structures that have historically been used to funnel illicit money into U.S. real estate. FinCEN officials say the goal is to protect the integrity of the housing market while making it harder for bad actors to find wealth behind shell companies and trusts. Unlike past pilot programs, this rule has no dollar threshold. meaning qualifying transactions must be reported regardless of price. Industry professionals accept the change to increase compliant responsibilities for settlement agents and attorneys, but many welcome the added transparency. By shining light on high risk deals, the government hopes to strengthen confidence in the market and block criminal funds from distorting home values. All right, so being that I'm in the space, guys, you know, this is like it's it's not too many people out here that's doing all cash deals, right? And the ones that are, we look at them like they're crazy because it's so much financing available for them. And ultimately, just buying a property cash is just insane to us because as a investor, you don't want to tie your cash up into a piece of real estate when you can finance that piece of real estate, because this seems more so on the investor side, because most folks aren't buying homes to live in cash. Not to say that it's not happening, but typically once that happens, they're typically buying the property, they're looking to rehab the property, and then they're looking to either sell the property or hold the property into their portfolio, right? So in these cases, like what we do as a lender, you can't buy a property in your personal name, an investment property in your personal name. Everything has to go through an LLC. So in the space that we're in, private money space, we're not going to have that kind of issue because our deals are financed. So the paper trail is going to always be there. With the cash transactions, a lot of times folks just, they'll spend whatever dollar amount that they spend. And then, at that point, I can see where they're coming from, because a lot of times you can literally, kind of launder money through real estate if you really think about it, with these cash transactions. So I get where they're coming from. But in our world, it doesn't really matter because, like I said, we don't see a lot of cash borrowers. And if we do come across a cash borrower, we do what is called delayed financing. So if you bought that property for cash, then we could give you a certain percentage, of what you purchased the property for, for. But we also like to add a rehab component to those kind of deals, because it only makes sense. You brought a property cash. Typically, those properties need some form of rehabbing. So it all lines up in our space. So we're not too, we have to see more of what the rules of the road are. But for the most part, this doesn't really hit the industry that we're in. This is more so for those investors or crooks in this case that's still out there buying properties for cash. The majority of the investors that's out there in the marketplace, they're not buying properties for cash. Why would they do that? Why would they spend 100%, to go purchase a property when they could come to a person like me and end up only spending 10% of that money, finance the rest? If they're looking to sell the property, once they get done with the actual rehab, they can sell that property, get, whatever profits they're going to get, or they can refinance that property and, rent it out, Airbnb it, whatever the case may be, refinance it, put it into a long-term loan, and just go ahead about their business and allow their tenants to pay for the real estate. So it won't hit my lane in any kind of form or fashion as I can see it as of right now. But the folks that it's going to be real easy to, put their fingers on this one. This is really a good thing. I didn't know that was happening. I know people were laundering money, via real estate transactions, but I can see it, at the end of the day. So we'll keep our eye on it and we'll let you guys know, what that looks like a little bit later, around that December timeframe when this law when this policy will actually go into play. All right, so we'll keep our eyes on it. We'll come back. All right, so let's keep it moving. Let's talk about who we want to talk about. Where is she at? Okay, so they're saying that the president lied about the Fed, the reserves, black governor mortgage fraud allegations is what they're saying. So Federal Reserve Governor Lisa Cook is being vindicated by newly revealed documents that undercut allegations of mortgage fraud leveled by the Trump administration. Financial forms obtained by the NBC News show Cook's Atlanta home was consistently identified as a vacation home and never claimed as a primary residence, directly contradicting accusations that she misled lenders. The record suggests that the case against Cook was built on shaky ground and may have been driven more by politics than fact. At the center of the dispute are claims by President Trump and Federal Housing Finance Agency Director Bill Pulte, who argued that Cook posed as a primary residence of the Atlanta property to obtain better loan terms. Yet a loan summary for the Bank Fund Staff Federal Credit Union dated May 2021 explicitly states property use vacation home. Further review of Fulton County, Georgia records show Cook did not seek tax exemption tied to a primary residence, reinforcing her consistent classification of the property as secondary. All right, let's talk about this. Number one, these guys know, the president know exactly what was happening here. He already knew that she wasn't doing this. He does it. I mean, this is a part of the game. You can't have, two primary properties. You can't even fake that, right? It's too much transparency, too much paperwork. You need your driver's license. Why your driver's license saying that you live here when you're actually living somewhere else? Blah, blah, blah. So it's so many things that's in place that won't allow you. I mean, you can potentially do this if you're a crook, but a person who doesn't really know real estate like that, and the ones who do, they understand by being in the space that your primary property is your primary property. Anything after that is either a second home or a investment property, right? So once they brought this up, I think what happens is they bank on folks not being well educated about real estate. That's what they hope and pray when they bring up these frivolous lawsuits, because the average person don't. So she sat back because she understood or understands the market. She understands how this game is played. She understands the role you must, participate in when it comes to buying real estate. She's a part of the Fed. So when they brought this up, I knew it was political. It had to be, because she wouldn't make that kind of mistake. It's too easy. It's too easy for her not to make the mistake. And, exactly what happened. Once they did the checking, they found out that she bought that property as a second home, which is technically and all above board legal. So I'm pretty sure once she figured out what they were trying to say or, hold her accountable for, she just went to work and showed the necessary paperwork, which is available. That's how I know that this was political, because they knew when they were trying to say this and trying to, just throw some stuff out there to hurt another, potential black woman who's in a high position, and they don't like that. They went to, she cheated. You know what I'm saying? The cheaters forever always trying to say somebody else is cheating. And in this case, they found out, exactly what they were supposed to find out, that this lady did everything above board. And now what? What is happening now is they're quiet as a mouse. Ain't nobody over there saying for a minute, a week or two that you're firing and she fired. Because a lot of times that's what bullies do. They bully you in hopes that you run home and, and not come back out and face the bully. And in this case, she faced the bully. And typically when you do that, on the other side is the truth, right? So that's what happened here. They tried to, in hopes that she would buckle, in hopes that, just because they said she did something, and they had the pressure and it was all over the news and people saying she's cheating, that she will fold and they would have an opportunity to put somebody in her position that they could control. They can't do that with her. So anytime you can't be controlled, then they'll go through whatever measurements, whatever extremes is necessary to make sure that they get you out of there and they get the folks that they could control in there. So I think that's what happened here. But it's good to see that she made it to the other side and she can continue doing what, a lot of people don't have the opportunity to do. I think she might be the first Black woman to be in this position. And once again, they don't like that. So that's kind of where we are with that. We'll keep our eyes on it. But big up to Lisa Cook for standing her ground, going and making her case and showing that you can be lied on. Don't think that it's impossible because it can happen. All right. All right, let's keep this thing moving. This here, folks, I don't know what's going on, but I don't like it. So according to reports, Delta State University student Demartrion Trey Reed, 21, was found hanging from a tree on campus Monday mornings, officials said. Police do not suspect foul play and an autopsy is pending. And of course, our thoughts and prayers are with this family. So I don't know because they haven't released a lot of information on this. So we're going to have to just kind of not get too in depth about it because there's not enough information. But the fact that they found a Black kid hung from a tree on a college campus, ain't no Black person hanging themselves from no damn tree. I don't understand what's going on. This is not, if it's suicide, then I just can't see that if you're going to commit suicide as a Black person, that is not what you're going to do. The history of being hung is embedded in us. You're not going to just hang yourself out on a college campus for what? Could have did it in your dorm room, could have did it, any other place, but in a tree on a college campus after all all the things that is happening out here in the world right now, this dude just gonna go and hang himself. I just can't believe that. That's insane. But I don't want to talk too much about it right now. I just wanted to bring it up because this is, this is just unfathomable. Like, who does this, right? And it's just the climate is so heavy right now where I have to wait and see. We're going to check back with the autopsy. Ain't too many folks really talking about it, because, it's somebody being hung on a college campus from a tree. So I see a little couple media outlets that's then picked this up. It's on Instagram and Facebook and things of that nature, but I'm not getting a lot of information on it. So I'll reach back in, at some point and kind of see what's going on. But yeah, that's crazy. I mean, hung from a tree on a college campus. I know his parents got to be devastated. So I'm just waiting to kind of see what's going to happen once they basically get to the bottom of this. But in the meantime, in between time, we're going to keep our eye on this because that's crazy. Somebody being hung from a damn tree on a college campus. Ain't no a black kid. You know, black people doing that to themselves. I just don't believe that. But we'll see. All right, let's keep it moving. All right. They are here still firing black women, right? All right, so Karen Atai, the last black full-time opinion columnist at the Washington Post, said she was fired for quoting Mr. Kirk directly about black women not having the brain power to think. So the quote from Kirk said, "Black women do not have the brain processing power to be taken seriously. You have to go steal a white person's slot." Atia said she was accused of endangering colleagues and dismissed without a conversation, calling it a violation of the paper's standards of fairness. The Post declined to comment, citing personal matters. Its social media policy instructs staff to avoid posts that could undermine editorial independence through exempt columnists and opinion writers. Ateas, hopefully I'm pronouncing her name correctly, condemned political violence, but also highlighted Kirk's past remarks about black women. She said her refusal to perform over-the-top grief for white men who expose violence. Atea, who joined the Post in 2014, framed her firing, excuse me, as part of a broader purge of black voices across media, academia, and government, calling the trend both dangerous and historically familiar. So, guys, you got to recognize the climate that we're in, right? Sometimes we got to just sit on the sidelines and let, folks do what they do. In this case, the climate is too electrifying to say anything, about anybody, even though there's the freedom of speech, right? But in these cases, the way that everything is, being positioned, especially for us African Americans, you gotta just stay out the way. Just stay out the way. I know you got your opinions about this crazy stuff, but for the most part, we need to be focused on self. We need to allow them to go back and forth about, whatever they want to go back and forth about when it comes to their ideology and the things that are happening in the world. Nobody wants to see anybody die the way that Mr. Kirk ended up having to, pass away. But at the same time, we don't need to be talking about it. Not to say sit on the sidelines and not have your opinions, but sometimes some things are better left just unsaid. Folks know what the average person thinks about this. But you don't need to be out here just, standing on your soapbox about it. Let the folks who, are intimately engaged with this kind of stuff have, that dialogue. Just get out the way, move out the way, let them do what they do. At the end of the day, timing and time, heals all wounds. But at the end of the day, that man had a family, and I get it. He basically was out here doing whatever it was that he was doing. And it may have offended some folks, but at the end of the day, nobody deserves to go out like that. I mean, that's just, it was barbaric, to say the least. Sometimes you gotta, you just gotta have better arguments, right? If you don't agree with folks, then sit your ass down and come up with arguments that can, be put forth to combat whatever you don't agree with. But as far as, bringing up what he said in the past and blah, 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 that's not even, the man's gone now, so whatever he said in the past is just that, is what he said in the past. So, you got to have thicker skin out here in this world. you gotta know your audience, and you gotta understand what's happening around you right now. So if you see that the average, you know, just the average things that's occurring to people of color, it's highlighted. It's at the top of the totem pole right now. So for folks who need their jobs, and if you don't, if you feel like you can just say what you want to say and you okay with the repercussions, then do you. But if you know there's some repercussions behind what it is that you say that could potentially, you know, hurt your livelihood, then you gotta be careful. You gotta know when to stick your toe in and when to keep your damn shoe on. So, I would say to her, prayers, to her to eventually figure things out. But folks that's out here, you see the climate that we in. Mind your business, handle your business, and keep it moving. It's about survival out here right now. That's the crazy thing. And if you don't feel that way, just jump out there and be accountable and to your family, um, for whatever might come behind whatever it is that you're saying. To the masses, I would just say be careful, because these folks ain't playing with you, as you can tell. You better stay in your lane, not to say be no punk, not to say not have your opinions, but really, there's no reason to be talking about this. The man passed away in a traumatic fashion, and nobody should be highlighting that. Let that man rest in peace. All right, let's keep it moving. All right, so I know we're talking about, let's see. Okay, so Michigan lawmakers are only bringing this up because it's in my state, right? Have introduced a new bill that would ban online pornography statewide. House Bill 4938, known as the Anti-Corruption of Public Morals Act, was introduced by Representative Josh Shriver, a Republican from Oxford. The bill would prohibit the distribution of material online, including videos, stories, and images, require internet service providers to use filters to block material and actively prevent people from bypassing those filters, impose criminal penalties of up to 20 years in prison, folks, and $100,000 in fines for distributing banned content. They will also fine internet providers and platforms. If passed, it would take effect 90 days after being signed into law. More details about it. We'll kind of take a look at that. But yeah, I mean, the thing about Republicans is they are typically the type that they look at the world with white gloves, but in the public, but behind the scenes, they out here acting a damn fool. They out here looking at porn just like everybody else that be, looking at porn. They out here having sex out of wedlock just like everybody else that be having sex out of wedlock. It's really like, one of those things that they put their morals and values out on Front Street, but behind the scenes, not so much. So with this, I mean, you could try to stop folks from, doing or looking at porn all you want to. It's not going to stop them. They will figure out a way. So this is more, I think, hyperbole. I think this is more politics. A guy being able to say, I tried to stop pornography and blah, blah, blah. And, but we'll keep our eye on it. If this bill passes, then we'll come back and we'll talk about it a little bit more. But yeah, it's crazy. All right, let's keep it moving. All right. Wanted to talk about this a little bit because I don't know what's really going on and why this is actually happening, but no, not that. Where is she at? Mm-mm-mm. All right, so I don't have the actual photo, but let's talk about it anyway. Okay. All right. So, on September 10th, the Department of Education Secretary Linda McMahon announced that the DOE is suspending 350 million in funds earmarked for minority serving institutions. According to the New York Times, the move was met with swift criticism across political and educational cycles. Senator Patty Murphy, Democrat in Washington, ranking Democrat on the Senate Appropriation Committee, led the charge in calling out the administration. She accused McMahon and Trump of putting politics ahead of students, simply looking to get ahead and sowing chaos in our nation's school. These are long-standing programs that Congress has authorized and provided funding for on an annual basis that the Trump administration empowered by the year-long slush fund spending bill passed in March is unilaterally deciding to eliminate funding for at the end of the year. Murray said this is another important reminder of why Congress needs to pass funding bills like the one Senate marked up this summer that ensure Congress, not Donald Trump or Linda McMahon, on how they decide how the limited taxpayer dollars are spent. This is just so pro. It's just, it don't make sense. Like, why would you? This, to me, when you do stuff like this, it spells racism. I just don't understand. You're not doing this to PWIs. You're only doing it to black schools, which is insane to me. Or, black individuals that are at white schools. Just because, once again, you guys are out here as white Americans that had umpteen amount of opportunities. We had to create our opportunities. That's why that's why there are black universities in the first place, because we wasn't being educated at white university, wasn't even allowed to be on those campuses. So we had to go create our own, right? And in the midst of that, because the funding's not all the way there, because once again, we started so far behind to the point where the alumni are not that keen like these white alumni are, because there's so many of them, and then they're able to give back to their universities in legal ways, illegal ways, however it goes, compared to our black universities, our HBCUs. And it just doesn't make a lot of sense to take funding away. What was the dollar amount there? Let me get to that again. 350 million. Well, why would you do that? I mean, to me, for you to do that, that's just saying you don't want African Americans to be educated, because once we're educated, we're a problem. And you're trying to figure out a way for it not to continue to happen. So, hold on for 1 second, folks. I got to go grab something real quick. Give me a second. Give me 1 second. Sorry about that. Okay. My bad. My bad. Sometimes you gotta improvise. Anyway, so but yeah, that's getting back to that. That's just crazy to me. 350 million um, that was earmarked. They're just saying, I'm gonna take that and you know go buy some Bentleys or some. Put that in so and so's bank account. For generational wealth. We don't want to spend all our money. Let's figure out ways to take money from the ones who we feel don't deserve that money and add it to our coffers. So I just disagree with this. I mean, we'll keep our eye on it. I give big ups to Senator Patty Murray, who's fighting that cause. But these are the things that I'm not hearing enough from our folks who are supposed to be. To me, it seems like black folks is just like I'm on the sidelines. I'm just gonna continue to watch the train wreck. Eventually it'll get to the point where that's what it seems like to me. So I'll keep my eye on it. If something changes, or we got some brave folks who can stand up to the administration, stand up to the once I guess CEO of WWE or WWF, one of them wrestling, thingamajiggas, who's running the educational department right now, who has no experience at all, but donate, get a job, donate, get a major position in the government type of deal. So unfortunately, once again, this is just something as color, people of color, once again, they're trying to hold us back. And once again, they're going to find out that that's going to never be able to be the case. We're not going back to slavery. So, outside of that, you can put these laws, you can try to stop folks from getting education, you could try to do all of that, but that's not about to stop people of color from succeeding, people of color from doing the necessary things that they need to do in order to get educated. It's not going to stop folks. So you can keep taking money away. You can, keep doing your thing. We'll figure it out at the end of the day. So that's all I got to say on that. All right. All right. So let's talk about this. This is another thing that's kind of, no, not that. Right. So, the Michigan Unemployment Insurance Agency announced that roughly 350,000 workers will need to repay a combined 2.7 billion in unemployment benefits. The agency explained that while many of these payments date back to March 2020 during the height of COVID-19 pandemic, it had been unable to demand repayment until now because of a court order tied to a class action lawsuit, according to the UIA. The first repayment deadline is September 29th. The lawsuit brought by claimants who were told they owe money back after receiving unemployment benefits, and in some cases had wages garnished or tax refund seized, was resolved in May with a $55 million settlement, right? So, in this case, look, I'm not for folks, skirting the system. So if this is a situation where, you did something you weren't supposed to be doing, then you got to pay up. The folks who was in this mix and wasn't doing what the folks were saying that they were doing by taxing them, taking their refunds and garnishing their checks and things of that nature. They went to court, class action suit, and they got paid out 55 million. So they did it the right way. They had the evidence to show that they was doing it the right way, and they were compensated. Now, you folks who wasn't doing it the right way, get prepared to, get your money up, send your money in, whatever the case may be. I mean, it was COVID and a lot was going on and people was trying to survive. But at the end of the day, everybody know right from wrong. If you did wrong, pay up. The ones who did right did it the right way. They took them to court. They won the case, 55 million. So, I would say, be prepared because these folks going to come for you. If you was taking, unnecessary money or money that you shouldn't have been taking, they're going to come for you. So you got to remember the climate that we in. So all the stuff you was doing that wasn't above board, they're trying to circle back and, figure that out, put you in a situation where you got to figure it out. So we'll keep our eyes on it and we'll let you know once we, get some additional information. All right, let's keep it moving. All right, let's bring this judge up. I'm gonna have to get some backstory on this. But this Michigan judge dismissed criminal charges against 15 Republicans accused of falsely posing as official electors for Trump in the 2020 presidential election. The case brought over 2 years ago alleged that the defendants met at the Michigan GOP headquarters in December 2020. There, they signed a document falsely declaring themselves duly elected and qualified electors for the state, despite President Joe Biden's victory by nearly 155,000 votes. The judge's decision comes amid other state-level prosecution in Nevada, Arizona, Wisconsin, and Georgia over the 2020 fake electorate scheme. I don't know. In this case, I don't even know what, I got to do more information on it, but why would she do that? I don't get it. I'm assuming she must be a Republican as well. Because from what I can tell, like I said, I got to do some more research on it, but they did this. They technically tried to steal the election back in 2020 with this fakeness that it was rigged and blah, 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 and this and that, so I don't understand how, she came to, the decision to allow everybody to, not be charged in any kind of way when she know as well as everybody else that these folks was, doing some things that they weren't supposed to be doing. But I don't know enough about it to just really get into it. But I just wanted to bring her up just so we can, kind of see who made that decision. Because, a lot of times folks just say it and they don't really hear it, but they don't really put a face with what actually happened. So here we just wanted to put a face with it. As additional information comes, we'll take a look and, bring it to the forefront if necessary. But this judge was the one who, made that decision against the 15 pro-Trump fake electors. So, we'll keep an eye on it. And if something comes up, we'll report back. All right. Okay. So last but not least, as far as, nope, not that. Nope, not that. Where is it at? There we go. All right. So millions of divorced couples in America are still living together even after their divorce to keep their 2% mortgage rate locked in a study from 2022 to 2024. All right, so this is kind of crazy, but let's get into it. For divorcing couples, housing challenges can be especially complicated because of what experts call the lock in effect. When homeowners avoid moving to keep their low mortgage rates, research from the Federal Housing Finance Agency shows that between mid 2022 and mid 2024, um, this lock in effect kept nearly 2 million homes from being sold. Bank of America also reports that far fewer people are relocating compared with pre-pandemic levels. To cope, some separated parents are turning to a setup known as nesting. In this arrangement, the children stay in the family home while the parents take turns living there. Crazy work. The idea isn't new, but family law professionals say it's becoming more common as moving costs and interest rate rise. Still, nesting can be tough to manage. Right. Some parents treat the home like a short-term rental, leaving checklists for chores, groceries, and laundry. Others even divide the property into separate living areas with their own interests. Buying out one partner often isn't simple either, since it usually means refinancing at today's higher rates. New York attorney Marilyn Shittatines explained that this can saddle one spouse with a more expensive loan. For example, Morgan Dixon and Ryan Hambry would have to refinance under his name alone, replacing their current low rate mortgage with one potentially around 7%. Friends and relatives have mixed feelings about the arrangements like this. While some admire the efforts to prioritize children, others react with skepticism, as Dixon's put it. Most respond with some version of absolutely not, right? All right, so let's talk about it. You know, I kind of was in the somewhat the same situation, but I ended up selling my property. Um, but going through a divorce and then having to sell the property, um, you know, I just had too much house, so I wasn't gonna keep a 6 bedroom house and it would just be me and my ex at the time. She had her own situation. So I get it. Like you want to, and I had a 3.25% interest rate. We even tried to see if we can allow the buyer to assume it, but the bank wouldn't allow them to do that. But yeah, and that was almost 2 years ago when rates was even higher than they are now. And it took a minute, took about 3 months to sell the property. Desirable area, school system, the whole 9 yards. It was, perfect property, but it took a minute because most people couldn't get financing or didn't want to get financing because the rates were a little higher. I just happened to come across, a pretty independently wealthy family who was able to, just disregard the money part of it and wrap their arms around the location of the property and the property itself. But yeah, I mean, I get it, but it's tough. I would see it being tough, because when you divorce somebody, it's typically that wound that's open is really open, at the beginning. Eventually, you can become friends and life goes on, and there's no hard feeling that things just didn't work out in that moment, in that moment of time. But when you do it this way, you constantly, got to see the person. If you got a young family and they're entrenched in the school systems and sports and things of that nature, this could be an option. But, you got to constantly, when you divorce a person, you want to move on. You want to be separated from that person. You want to not see that person, as much as possible. Unless you have a good relationship with that person, and this no hard feelings, everybody's moving on. I'm doing my thing, you're doing your thing. And then this could potentially work, but you know, I get it just because you want to, keep a low interest rate, but happiness is well is much more sincere and valuable than a damn interest rate on a home. There's a million homes out here. You can always, get another one. Or if it's that crazy and you're trying to, move forward and you want to keep the home as one of the individuals in that relationship, then you got to do what you got to do. If you don't want to live there anymore and you got to refinance, well, take your cash and go get you another property and rent that property out, or or sell that property and cash out and go on about your business. But if there's still some love there in some kind of capacity, not love, but you genuinely care about the person and you guys are, really looking at the real estate as, an actual investment, an actual, you know, a tool that can allow you to continue or potentially create generational wealth, then yeah, look at this kind of option as an option for you. But if not, sell that damn property and move on, or figure out a way to refinance it, accept what the rates are now, cash out, move on, and rent that thing out and allow it to become an investment property for you. So that's just some options that I would look at. But I get this. I understand why people are doing it because, it's probably never going to be a time where rates are going to be that low again. So it's hard for you to get off them kind of rates, when you got a property, at 3%, 2%, and now rates are 6, 7%. So I get it. But I just thought we would bring that up because it was interesting. I didn't even know people were, doing this, or what's the word for it? Nesting. I hadn't heard of nesting before. So I just thought I would bring it to the forefront, educate the audience out there. But yeah, it's interesting. All right. Okay. So that is the end of our topics for today. Let's talk about our 4 viral mortgage and real estate hacks. Number 1 hack is the lease option ladder. Instead of buying, right away, structure deals as lease options, stacking multiple properties with minimal upfront capital. This lets you control the property without immediate financing and cash flow from closings, right? Hack number 2 is equity arbitrage with the HELOC partnerships. Team up with the homeowner sitting on equity who don't want to sell. Use their HELOCs to finance flips or rentals and split profits. No banks, no traditional loans, right? And hack number 3, the probate pipeline. Court filings are public. Build a relationship with probate attorneys and estate planners to find undervalued properties before they ever hit the MLS. That's definitely a good one. The title trap check. Most investors never recheck chain of title after purchase. Partner with the title firms like Stewart.com for quarterly audits to uncover hidden liens, judgment, or clerical errors that could kill future sales, right? All right, so that is our 4 viral mortgage and real estate hacks. Like I said, we've displayed so many hacks now. You could just, like I said, just go look at the hacks alone. If you just go back through, what is that? This is our 27th episode? Yeah, I think it is. 29th episode. Okay. We have 4 hacks, so do 29 times 4. And we try to bring new hacks every time. We may have issued the same hack maybe once or twice just by mistake, but for the most part, you're getting a brand new tool to use in your investment, history investment category to allow you to be a better investor. Just give you multiple options as you're determining if that's exactly something that you want to do, and just regular homeowners as well. So, anyway, that's the end of that. We're gonna bring up our guys to talk about. Let's see here. All right. Our deep dive. We're going to bring our deep dive folks in and let them do what they do. Okay. Let me get down and bring them up. All right. So let's do that. Da, 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 da.
Think about the complex stuff, the unseen machinery working away behind it all, just to make sure that whole transaction goes smoothly, securely.
Without any, nasty surprises down the line.
Exactly. Well, today, that's what we're doing. We're kind of pulling back the curtain on that hidden world.
Look,
We're launching into a deep dive, focusing on title services, and we're looking at it through the lens of a really big player, Stewart.
Stewart, right.
Hi.
A major name in the industry.
Yeah. And our mission today is to really get our heads around Stewart's goal. They want to be the premier title services company. We want to explore just how wide-ranging their services actually are.
So how they operate, who they work with.
Precisely. Who they serve, and the absolutely vital role, often kind of overlooked, they play in keeping the whole real estate world turning safely.
Okay, sounds good.
All right, let's unpack this then. When you hear title company, honestly, what pops into your head?
For a lot of people, I imagine it's maybe just paperwork, signing documents at closing.
Right. Could be pretty vague. But the material we've looked at, it gives us this amazing insight into a company that isn't just, in the space.
Yeah.
They're aiming to lead it.
The premier provider.
Exactly. And I have to say, their reach and what they actually do, it's much bigger, much more critical than you might first think.
Yeah, what's really striking is just how fundamental title services are. I mean, to the whole real estate ecosystem.
Fundamental how?
Well, it's not simply about, shuffling papers around or making sure the signing happens. The real core of it, it's providing this like ironclad guarantee of ownership.
Ironclad, okay.
Yeah. It's about making sure the transaction is secure, that the ownership is valid. And think about it. For most people, buying property is the biggest financial thing they'll ever do.
True. Biggest investment for many.
So Stewart aiming to be premier, that's not just marketing fluff. It really speaks to this deep understanding of that huge responsibility. They're positioning themselves as the ultimate safeguard, really, a shield against, I don't know, complex histories or future problems with the title.
That's a strong way to put it, a safeguard. But okay, how do they manage that? Being this huge nationwide company, but still needing like really local knowledge. Property laws are different everywhere, right?
That's a really good question. And it's kind of gets to one of Stewart's key strategies.
Yeah.
So yes, they absolutely have this nationwide network of title and closing offices.
Yeah.
But the clever part is how they use that scale without losing the local touch.
Okay, how does that work in practice?
Well, think about it. Property law, zoning rules, even how land records are kept. It can be wildly different from one county to the next, let alone state to state.
Right. What works in Florida might not fly in Oregon.
Exactly. Stewart gets that.
Yeah.
The basic idea of title insurance is the same everywhere, but applying it that needs deep, boots on the ground knowledge.
So the local offices aren't just branches.
No, not just pins on a map. They're staffed by people who really know the area, the regional quirks, the local regulations. They have relationships with local authorities.
Ah, okay. So they get both the big company backing and the local smarts.
That's the goal. The consistency of a national brand, plus the tailored advice from someone who actually knows your specific market. It makes their promise of being a trusted partner feel real right there where the deal is happening. helps avoid those nasty location-specific surprises.
I see. So the HQ is there for big stuff, but the local teams are key day to day.
Precisely.
Okay, that makes sense. And speaking of tailored service, it's interesting. They don't just operate at this high network level, but they also offer these really practical tools for, regular people. I'm thinking about their Stewart rate calculator.
Oh, yeah, the calculator. That's a great example.
It seems pretty direct, user friendly, tackles a big worry for people. The cost. How much is this all going to cost?
Absolutely. The rate calculator is all about transparency, empowering the customer. Because let's be honest, real estate deals can feel like a maze of fees, right?
Definitely. Lender fees, recording fees, escrow, title insurance. It adds up.
And it can lead to unpleasant surprises at closing. This calculator aims to, well, cut through that complexity. It gives you a solid title and closing fee estimate upfront, either from a Stewart Title office or one of their approved providers.
And it's not just one lump sum, right? It breaks it down. I saw mentions of a buyer close sheet, a seller net sheet, and a specific title and escrow fee estimate.
Exactly. And those aren't just, fancy titles for documents. They're crucial financial roadmaps for everyone involved.
Okay, walk me through why they're so vital. The buyer close sheet.
So the buyer close sheet lays out all the costs the buyer should expect, very clearly itemized. From loan costs to the title policy, it lets them budget properly, no last-minute panic.
Makes sense. And the seller net sheet.
That gives the seller a realistic picture of what they'll actually walk away with after everything's paid: commissions, taxes, closing costs from Stewart, everything. It's that bottom line they need to plan their next move.
Crucial for planning, yeah. And the title and escrow fee estimate. That sounds more specific.
It is. It zeroes in on the costs for securing the title insurance itself and managing the escrow process.
Escrow. Right. That's the neutral third party holding everything.
Exactly. They hold the money, the deed, the mortgage docs, everything, until all the conditions of the sale are met. It ensures a fair, secure deal for both sides. They only release funds and documents when it's all signed, sealed, and delivered, so to speak.
Got it. So without these tools, things would be much more uncertain, stressful.
Definitely more stressful, less predictable, less trustworthy, frankly. These tools provide clarity, predictability. And in real estate, that's gold.
Okay, so that covers the direct consumer side. But what really caught my eye was this focus on supporting other title agencies. The material says they're dedicated to helping title agencies grow, offering tools, resources. What's that about? It seems almost collaborative.
That is a really interesting point, and I think it reveals a lot about their long-term strategy.
How so?
Well, it's not just, being nice or hoping a rising tide lifts all boats. It feels more like a calculated network strategy.
A network strategy, meaning,
By helping smaller independent title agencies, giving them access to Stewart's tech, their legal support, their processes, they achieve a few things. First, they expand their own effective reach without the cost of buying everyone up. These agencies kind of operate under the Stewart umbrella, benefiting from the brand and resources.
right, expands their footprint.
Yeah, but maybe more importantly, it helps standardize the industry. Better practices, higher quality service across the board, fewer errors, a more reliable system overall.
Ah, so by lifting others, they solidify their own position.
Exactly. When you help set the standard, you become the central platform, the indispensable partner for the whole industry. It's a smart way to really define what premier means in practice, not just being the biggest, but enabling the best.
Okay, so it's not just what they do, but enabling others. That's significant.
Yeah.
Now, let's pivot back to who they serve directly. The list is huge.
It really is.
It covers almost everyone involved in a deal: commercial agents, real estate agents, home buyers, sellers, lenders, builders, developers, relocation professionals, even international clients, and title agents themselves, as we just discussed. It's incredibly diverse.
It is. And connecting that back to the bigger picture, that list really shows you just how many different people, different roles are involved in any single property transaction.
So many moving parts.
So many. And it shows how a company like Stewart tries to be that essential, trusted partner for every single one of them. Each group has different needs, different pressures, but they all fundamentally rely on the security and efficiency that good title services provide.
Right. It underlines the complexity and Stewart's role in trying to manage it all.
Exactly. They're positioning themselves as that central hub, ensuring things run smoothly across all these different segments.
Okay, but let's push on that a bit. It's one thing to list who they serve, but why? Why would, say, a commercial agent specifically need Stewart or an international client? It has to be more than just the general idea of a secure deal, right? How do they tailor it?
That's an excellent question. It really forces us to look at the specific value proposition for each group. Let's break down a few.
Okay, commercial agents.
Right. Commercial agents and brokers. Their deals, often huge money, multiple properties, incredibly complex structures. Think big office parks, retail centers,
Birthday stakes.
very high stakes. So Stewart offers them more than just a basic title search. They need fast, really thorough due diligence, digging into potential easements, zoning problems, light-ins, anything that could kill a multi-million-dollar deal. They need specialists who can handle, say, deals across multiple states or tricky financing. It's about managing massive financial risk.
Okay, got it. What about regular real estate agents?
For them, Stewart is a key partner in building trust with their clients and making sure closings actually happen smoothly. A smooth closing reflects well on the agent, right?
Leads to referral.
Sure, reputation is everything.
Exactly. So agents rely on Stewart for quick, reliable rate quotes, good communication during that stressful closing period, and critically, sorting out any title problems fast so the deal doesn't fall apart. It helps them provide a good experience.
Okay. And home buyers and sellers.
Mhm.
We touched on this, but briefly.
For buyers, it's that core peace of mind, knowing you actually own the property free and clear, no hidden listens from a past owner, no surprise errors popping up, no old boundary fights.
Yeah, you don't want those skeletons.
Definitely not. And for sellers, it's ensuring they have a clean, marketable title so the sale can actually go through without issues protecting their equity.
Makes sense. Lenders. Why do they need Stewart?
Lenders. For them, it's purely about protecting their investment. They're lending huge sums of money against that property.
The mortgage, yeah. Right. They need absolute certainty that the borrower owns it, and crucially, that their mortgage lien is secure and comes first. No other claims can jump ahead of theirs. Title insurance from Stewart gives them that protection. It guards against some hidden prior lien suddenly taking precedence if the borrower defaults. That could cost the lender a fortune.
Okay, protects the loan. What about builders and developers?
For them, clear title is vital right from the start. They need to know the land they're buying is completely clear of anything that could stop them building or selling later.
Like old restrictions or something.
Exactly. Or liens from previous work. They also need help navigating land use rules, construction liens, and making sure that when they sell the finished house or building, the new buyer gets a perfect title. It protects their investment and lets them move projects forward efficiently.
All right, relocation professionals. That seems specific.
Yeah, they operate under intense time pressure. Moving employees often means selling one house and buying another simultaneously, maybe across states.
Super stressful.
Totally. So Stewart's nationwide network and standardized processes are huge here. They help streamline these complex, time-sensitive deals, making sure titles are clear and closings happen on schedule. Less stress for the employee and the company.
And finally, international clients.
There, Stewart helps navigate the extra layers of complexity. Foreign ownership rules, different tax laws, maybe just needing a trusted guide in an unfamiliar legal system. Stewart provides that specialized expertise to make sure those cross-border deals are secure and compliant. They're like a bridge between legal systems.
Wow, okay. That really does paint a much clearer picture. It's not just one service, it's a whole suite of tailored solutions addressing very specific pain points for each different player in the game.
Exactly. It shows how they weave themselves into the fabric of the industry.
And, beyond all these services and the industry impact, the material we saw also touched on the people side. There's that section, Bring Your Skills to Stewart. It suggests they're also focused on, well, careers, inviting people to explore the possibilities.
Yeah, that's important too. It reinforces the idea that behind all the tech and the processes, you need skilled people.
Right, it's not all automated.
Not at all. That call to bring your skills isn't just recruitment speak. It points to the need for ongoing expertise. Legal analysts, researchers, customer service pros, tech innovators. It suggests they invest in their people, recognizing that trust, knowledge, solving problems, that human element is still irreplaceable, especially in something as complex as real estate. You need a strong team to deliver on that premier promise.
So, as we sort of wrap up this deep dive, the picture that emerges is Stewart positioning itself as this really comprehensive, vital, trusted partner across the board in real estate.
Yeah, from individuals to huge developers.
Right. From someone just needing a rate quote for their first home to major developers planning huge projects, lenders needing security, even other title agents needing support. Stewart seems deeply embedded in how real estate deals actually happen,
They're aiming to be that central, reliable player.
offering that mix of national reach and crucial local knowledge, backed up by practical tools and a real understanding of what different people in the industry actually need. So hopefully, you now have a much clearer sense of that complex network that supports every property transaction and the really central, though often unseen role a company like Stewart plays.
It's definitely more than just signing papers.
Way more. It's about peace of mind, financial security, knowing your property dealings are sound, however complicated they might seem.
You know, this whole discussion really brings up a fascinating question for the future, I think.
Oh, yeah. What's that?
Well, in this world that's getting more and more digital, right?
Right.
Everything moving online. How do companies like Stewart strike that balance? The balance between needing cutting edge digital tools, online calculators, efficiency, and the very human need for trust, for local experts, for secure personal partnerships, especially when dealing with something as huge and personal as your home or your business.
That's a great point. Efficiency versus trust. Or maybe efficiency and trust.
Exactly. Digital tools are great, but real estate often needs that human touch, that local expert you feel you can really rely on. It's a tricky balance, and getting it right is probably key to the future of this whole industry.
Something definitely worth mulling over. Next time you're involved in or even just thinking about a real estate deal, maybe take a second to consider all those hidden gears, the experts, the
All right, folks. Stewart title. Using them right now. Just used them on a transaction that we closed out today. So they've been around. They're the biggest. They're great. I mean, I'm not gonna say they're perfect because just depending on where you are, things can happen in a real estate transaction. So sometimes it may not be 100% perfect, but these guys, they are good. They have branches everywhere. You can, do international transactions through them. So Stewart title, and that's the thing about our platform. We bring up just not real estate or lending. We want to just kind of bring up all facets of the real estate transaction, what an investor and who an investor needs to link up with once he starts to build his team. You got to have your title, you got to have your contractors, you got to have your realtors. So we're going to bring up realtors, we're going to actually bring up title company individuals to have a discussion with them and kind of get a more detailed biopic of what it is that they do. That way, when you're trying to make real estate transaction decisions, we'll have, or you will have, a place to run back to kind of help you to start building that team, right? All right, so that's the end of the show, folks. Hopefully you guys had a good time. Hopefully I educated you a little bit more than you were educated before you heard the words that was coming out of my mouth today. But that's what I'm here for. But anyway, that's a wrap for the Mortgage Mayhem podcast, episode number 29, folks. We've covered the headlines that matter, the scandals you won't hear about anywhere else. And I gave you 4 solid real estate hacks to add to your portfolio of real estate hacks that you get from the Mortgage Mayhem podcast, right? So don't forget to like, subscribe, and share this show with someone who needs these insights, folks. So once again, don't forget to like, share, and subscribe. Because people, need to, you may not, but your friend, your family members, so on and so forth, might get something, from these episodes. I mean, we talk about with our hot topics, but we always do deep dives. We always doing interviews with folks that matter. And then we're always, giving you, like I said, real estate hacks that can help you in your investment, journey. So once again, I'm G Money, your humble host, and this is the Mortgage Mayhem, where real estate meets real mother-ucking talk. So until I see you guys again next week, have a joyous week, a nice weekend. We wish you nothing but success out there in the world. So be good, folks. I'm out.